Binky, I want to talk to you about the midterms because often, it's an incumbent disadvantage. What happens and what do equity markets react like?
I think what, people should know is that historically there have been two very, very strong, very, very clear, regularities around the midterm elections. One is, as you mentioned, the very strong negative incumbent bias. And by that, I really mean the incumbent president's party. So 18 out of 21 past midterms, so that takes you back, almost 85 years. The president's party's lost a significant number of seats, in both the House and the Senate. An average loss in the House would be 26 seats, and that implies in the current context that the House would change majority. It's a little bit more idiosyncratic this time around because of the distribution of Democrats and Republicans in the Senate. But I would argue, simple top-down perspectives, and there are, from a top-down point of view, things with which the outcome is, more strongly correlated than just looking at the average of 26. But they argue even more strongly that the Republicans are likely to lose the House. And I would argue, and I do think of the midterm elections as potentially the biggest catalyst that there is out there to year end. I do think of it as a slightly mushy catalyst because it's very diffuse and you can't sort of price it in until it kind of happens. But I would argue, U.S. growth is extremely good. U.S. growth is extremely good for its own reasons. There is very little evidence, basically, so far that any of the policy changes have had an impact yet. We're talking about 4% GDP growth. We are talking about the ISM manufacturing running 58 to 60 for about a year, which is very unusual by itself, let alone in the 10th year of economic recovery. And so I would argue, a change in majorities in the House and the Senate is not necessarily going to basically change that growth outlook. At the same time, the administration's focus really on the trade policy issues, and while, most of us agree on many of the issues that are involved, in terms of the strategy that has been adopted and the risks that it creates, I would argue basically that a check on the current administration's power on trade policy is actually likely to reduce the downside risk to growth. And so it really, creates upside risk for the equity market.